Hello and welcome to my gold US dollar technical analysis. So I already prepared something and just have a look at the recent price development of gold and where gold might be headed. So we had one major high, not up here. This was the high of the previous wave 1. If I just zoom out a little bit, there it is. This was the major high in 2011, which was obviously the all-time high for gold, and marked the end of the first overarching really great impulse, which led to this correctional pattern down here, which stopped here, at least for the moment, and sparked a new impulse. So right now there are a couple of possibilities on where prices might go, but we are in the midst of an impulse. So obviously we are within the wave 3 of this impulse, so there are some price areas to follow, and all of this could obviously be another correctional move upwards. And but we will have to see how prices unfold. Right now, what is important is that we are on the way up in terms of prices. In the short term, we might go down a little bit in gold. This is perfectly healthy and all right. And we'll have a look at where possible turning points might be for gold. So if I have a look at the more recent price developments, I view this as a wave 1. This A, B, C, or W, X, Y, whatever you want to count it. This is the wave 2. Yeah, I would have to go into detail, but I will leave this out for the moment. And this is, in my opinion, the stopping point of the wave 2. So from here, if we project targets out, we can see that the wave 3 is likely to go into the region of $1,700. I don't know if it will be a little bit below or above. We will have to see about this, but this is a very sensible price estimate where gold might go in midterm. Yeah, so we have to see how long this correctional pattern takes. Just judging by the duration, we had this wave 2. This is probably a wave 4. The wave 2 was very short, and so the wave 4 can extend a little bit longer. It might be the wave 4 is over. This is a perfect possibility, but we don't know about this yet. So what we could determine just by judging by the price movement is this turning point, which is 159. So we have A, B, C, and A is just as long as wave C. So we have A equal to C, which is perfect for an Elliott wave zigzag, which means this is probably the first correction pattern, ABC. This, we have to see about this, but some people count this as a triangle, which is perfectly possible and alright, with the top line here and there, which is A, B, C, D, E, all the way up to here. And then following the next wave, A, B, C. Yeah, so this could have been another turning point, obviously. Could be the stop of this correction, but the correction, of course, could go on for longer. So we will have to see how this following price movement develops. Possible targets on the downside, obviously, this area at around 1400, 1410 or something, where there will be a lot of support for gold, obviously. And what must not happen, and in my opinion will not happen, is that it goes below $1,350, which would approximately, so which would erase the possibility of a wave 4, because wave 4 in such an impulse is not allowed to go into the price region of wave 1. So in my opinion, this is highly unlikely. So this 1350 might be the worst case of gold price drop that we will see, especially considering that gold in the long term is obviously bullish because there are certain costs to gold. Yeah, so in order to mine gold, you have to spend money. You have to pay your workers, pay your machines, and everything, and pay money to research new gold mining spots, and yeah. There's a lot of cost involved, and I think back in 2017, this cost was already around $1,200 per ounce. So obviously this depends on the country where you mine your gold and a lot of other factors, but the general cost was around $1,200 per ounce just to mine 1 ounce of gold. So obviously mining companies want to generate more revenue than they pay in costs just to be profitable. And yeah, so obviously when costs go down too much in gold, the mining companies cannot work profitable, and obviously mining companies would have to close their business, and so the supply in gold would go down and the prices would go up again. So the the cost of mining gold directly correlates to the price development in gold. And so this is another point why I don't think gold will, in the near future, ever go until $1,200 or something in this price range. And if it does, it will be only very brief in a short amount of time, just like it happened back here. Where was it? Here. Yeah, so gold dropped, but it was not for long, because obviously this is not sustainable for mining companies. The price quickly rose again after hitting this low, and yeah, this is the basic reason why gold in the long term is extremely bullish, and if you buy gold, you are likely to see rising prices. And so right now we are, in my opinion, in a wave 4. Yeah, so this wave 2 is finished. We had a very big and very fast impulsive wave 3, which is typical of the wave 3 of a wave 3, which is a very, very strong impulse, very high gains in a very short amount of time. And yeah, following this, obviously there's been hardly any major correction. This wave 4 sticks out a little bit, but even this was very short compared to the gains which have been made in gold. So we had, I think, what was it, $100 in what was it, 2 weeks or something, which is insane in gold, which is incredible. And if you traded gold in this time and you were long, you probably made really great profits. And yeah, so this is obviously the correction pattern that follows. This might be, of course, one turning point. So from here, gold could very much start rising again. So if we place this here, obviously we could see the climb to 1700. But in my opinion, gold could as well just move a little bit lower into this region. And especially considering that a lot of the indices like the Dow Jones and other global stock market indices look very, very bullish at the moment. So this means that likely the market participants are moving away from gold and into the stock markets again, at least until the end of the year or something. So in my opinion, the correction in gold will take a little longer, at least until the end of the year, maybe maybe until January of 2020 or something. And this is something to keep in mind, obviously. But in my opinion, what will not be broken are $1,350. So if you are already long in gold or want to go long, so the closer we get to $1,350, the better the entry point is, obviously, and the better of a possible revenue you can get out of a trade in gold. So we just have to wait how this correction pattern unfolds, basically, and then see how the next impulses unfold. Yeah, so when they arise, and then we can obviously generate accurate price targets for the top of the wave 5 and also the wave 3, which is one and the same. Obviously, there are some resistance levels, so this is a very important resistance level, $1,520, and as well 1,560, and above this there's 1,575, so this area, which is another point of resistance. So the 1, 2, 3, 4, 5 impulse could in between get obviously stopped at some of those levels, but if you have a look at the long term or midterm, so to say, the midterm, because in my opinion this is a midterm target, which could be met within 1 year, which could be met within 2 years. I don't hope it will take 2 years to reach this price target, but it is perfectly possible. And yeah, so basically, first of all, we have to wait for this correctional pattern to finish. We have to see, is this another combination wave, which will obviously generate another correctional pattern all the way to down here. But we will see about this. Just yeah, give it some more time and let the prices develop. Okay. So yeah, thank you for watching. This is it for gold for the moment. And yeah, if you have any questions, just leave them down below. And I hope you enjoyed the video. And goodbye.